Good morning, traders, and welcome to my lecture notes on the ICT 2025 lecture series. This one titled SMC Trading Opening Range Gaps. Now, we've went over the opening range gaps a couple times before, so I'm guessing this will be a trade review video showing how he trades the opening range gap. As a reminder, this video is not a summary or shortcut to ICT's video. It's simply my impressions and my own lecture notes as I watch his videos. I encourage you to watch the original video, which I'll have in the description. I'd also appreciate it if you can give this video a like and subscribe if you have not done so yet. And with that, let's get started.
I kind of want to review and also segue into the next portion of the trading model I'm employing this year. The previous lecture was dealing with opening range gaps and midnight opening range gaps and blending of those things tonight. I kind of want to show you what I did on non-farm payroll Friday. And you are encouraged to backtest it and paper trade it with a demo account. And in fact, you're going to see that I did, in fact, take a trade using this information. And I took a loss initially and then recouped it. And I was actually trading with real money in the non-farm payroll.
So we've gone over opening range gap and midnight opening range in previous videos. This one is going to be a review to reinforce those concepts, and he's going to show us a trade example that he took on non-farm payroll Friday with real money. Now you may think to yourself that ICT is a hypocrite because he said not to trade on non-farm payroll Friday, but he did. Well, why not trade that Friday? Well, the main danger is the 8:30 non-farm payroll news release. Most of the time, but not always, there will be a sharp repricing at 8:30 that will be unfavorable. However, after the danger has passed, there could be more opportunities at 9:30, for example, especially if the higher time frame objective has not been reached yet. My point is, it's more insightful to understand the reason behind what is said, rather than just taking his word at a shallow level. It's always better to keep an open mind.
Separate the man from the concepts. Go back to the rules that I showed, okay? You're getting distracted by the performer and you're not paying attention to the logic. There's a complete show that goes on when I'm educating, when I'm teaching, and when I'm actually executing. But I took everybody's attention to this level right here. When the price was up in this area here, we had yet to make the midnight opening range for Friday. We have yet at that time to make the opening range, regular trading hours for Friday. We haven't created either of those things. And I pointed right to this level right here because that's exactly where my algorithm is going to take price. So that brings us to today. At regular trading hours at 9:30 on Friday, the market opened up right here and traded down. How much of a range was that opening range gap? It was greater than 120 handles, wasn't it? So what does that mean? It's not likely to fill in. Knowing where the market's going to draw to, that's the most important critical thing, because all of these gaps, all of these concepts, these smart money concepts, they're not going to help you unless you still can read where price is going to go. Now, why did I pick that level? Why did I think it was going to go down there? Well, it's obvious to you now if you've been a student of mine. You can see it's a market maker sell model.
Okay, so I'm not really good at identifying market maker models, so I didn't see any of this. But if you've watched my market outlook videos that I put out every Sunday, I identified a major sell side liquidity pool down here. So I was already looking down here at around 20,930. So it goes to show that you don't need to be good at every single ICT concept. Just pick the ones that work for you, and a lot of times they will align with each other.
Now, this is our opening range gap for Friday's non-farm payroll. But I have a little yellow notepad, okay, small little notepad, and every day I have all of these levels. What levels? The levels you're seeing right here. The levels that were over here on the January 3rd opening range gap. The opening price, the midnight opening range, okay? The opening range of 9:30 to 10 o'clock. all of the quadrants, the consequent encroachment levels, previous day's high, previous day's low, the highest high and the lowest low the previous week, the highest high and the lowest low the last 3 days. These are all things that I have written down. But in your hands, having those numbers, it's useless to you unless you know what I've already taught in my YouTube channel. I've already taught you how to find the draw on liquidity. I've already taught you how to do those things. I've already taught you how to determine the bias. So once you have that first critical thing under your belt, then all these other things become useful to you. Like the rules I gave you when there's an opening range gap. How much is an opening range gap that says, nope, I'm not going to look for a gap fill?
So yeah, that goes along with what I just said. The most important skill is to be able to identify liquidity and bias, or the market direction. And that's what I try to help out with my market outlook videos. So if you're needing some help with that, make sure you subscribe and check out those videos. Even watching the older ones will help because I explain why I'm looking for the market to trade to a certain price.
You can see now this is the 1 minute chart of the NASDAQ, March 2025. And this is showing the midnight opening range. Okay, so midnight opening range, it's not a gap, it's just a range, just like the opening range for 9:30 to 10 o'clock Eastern time in the morning session, or when regular trading hours start trading for indices. These things work in Forex, okay? But as I taught and told you at the beginning, let me go through this portion of the content with indices because I'm going to be predominantly trading indices. If you use the levels I gave you in terms of projection, it's 0.5 and 0.1 or 0.1. By having that, it gives us a rough idea what the algorithm's going to do, and it's in close proximity to this extreme at -1 that the daily high will form. If there's ever a day like non-farm payroll, we already know that non-farm payroll is going to have an enormous amount of manipulation. It's going to have a lot of extras in there because the market's going to be pushed around and intervention is going to go through the roof. So because of that, these numbers won't be as precise on a FOMC day or a non-farm payroll day. So just know that, and like a CPI day too. So those are kind of like heavy hitter days, and you just got to be aware that it might not be as perfect as it would be on other days. All right, so you can see how the market did in fact rally up. Just went beyond the -1 standard deviation of the midnight opening range, then broke lower, created a fair value gap right there, and notice how that delivered to consequent encroachment of that gap and -0.5 level. And then it drops off precipitously. And then in here, right before non-farm payroll at 8:30 Eastern time, Friday morning, the market does in fact does its little stop run, and anyone short, and I was short initially with one contract, and then, or of a micro, and then it stopped me out, and then I went in again after getting stopped out because I understand what it's likely to do. And that huge pool of liquidity I outlined on Thursday night ahead of non-farm payroll was absolutely going to be delivered. And I was going to aim for that, but I don't want to ride through the 8:30 all the way to 9:30. So I'm just going to take something that makes sense, to make a nice little chunk of change without risking a whole lot of money. But it was a really, really nice drop. And you can see here, I went short here, trading in a fair value gap. And then it ran up above here, taking my stop, rallying a little bit higher. And then I wanted to see it go short from there. After taking my stop, I felt confident that, okay, I was premature. It wasn't much money. It was literally like 60 bucks or not even that really. And then it breaks aggressively lower after entering 3 contracts of the micro. And then I took my profit down here just in the same 1 minute interval. Now, I'm not telling you to do this with your real money. I'm not telling you to do this with your funded accounts. I'm not telling you to do this with your demo account. I'm not telling you to do this at all. I'm just showing you the things that many of you have asked for all the time. Show me, show me, show me. You can't do this. You're a liar. You're a scammer. You're a fraud. You don't trade with real money. Oh, I forgot to show you. That's a live account, by the way. So,
Okay, I let him talk for a while now. Let's go ahead and recap some of the things he's said. I'm really surprised, first of all, that he took this trade, but I'll get to that in a minute. First, he said that these concepts work for Forex as well. I don't look at Forex, but if you're a Forex trader, these can still be useful to you. But watch out for the 3 wild days, NFP, FOMC, and CPI. These concepts may not be as accurate during those times. And now he goes into his trade with real money, as you can see the AMP Live tab. I'm surprised with this trade because he always talks about how it's 50-50 with NFP news and how he's been more wrong than right in the past. Although that could just be him deterring new students from trading NFP. Also, he traded the micros. So if he is wrong, he wouldn't take as big of a loss as he would with minis. So in fact, if he take a loss, I'm not even sure we will be seeing a trade review. Who knows? But I was more expecting his trade to be around the 9:30 time right here. I was personally looking at this when price went into a large SIBI. It took out this pre-market high and then it displaced lower with a fair value gap. This was a good short entry with a small risk, but price did continue to drop with a couple more fair value gaps that could be used for entries. I was aiming for the 20,930 level, but let's see if he goes over that as well.
All right, so later in the day.
Okay, so yeah, this is what I was talking about. Here is the fair value gap from the previous slide. He didn't take that, but he did go short in the next one. Then there's also another one right here with an institutional order flow entry drill. He covered here at the low hanging fruit. And I was looking for here below all the sell side around the 20,930 level. But let's go ahead and hear what he has to say.
Okay, later in the day, when we get through 9:30 opening bell and we start working inside of that opening range between 9:30 and 10 o'clock, now this is the part where I use the next participation phase of this model, which is first presented fair value gap. So if you look at the gap right here, you see that? What that also overlaps with is if you see this wick, this is a discount wick. But when price is below it, that discount wick becomes an inversion because I'm trading for this level down here that I told you Thursday night before Friday even began. So here, this is the very first presented fair value gap of the morning. Since 9:31, it can't be the gap. If it forms on 9:30 candle, you have to wait. That was the rules for Caleb. This here, too early. This is the first one. So in this little shaded area here, that's my first presented fair value gap. I wanted to go short here. And now because we're not trading the non-farm payroll, that's after, this is after that 8:30. So we're inside of the opening range between 9:30 and 10 o'clock. So between 9:30 and 10 o'clock, that 30 minutes, I'm waiting for that first fair value gap. But what direction am I trading in? That purple line. That's that level I told you on Thursday night. So that's the draw on liquidity. I'm not looking for it to go below this low and be done. I'm looking for it to have a sustained price run to that purple level there. And that's why my entry was here at 21,123.25 and covering on a limit as it breached at 20,975.75, which is below 983.75. And of course, this is not micro. These are mini contracts now. So I want you to think about how we just blended all these things in a very simplistic manner.
So that's pretty much it for this lecture. He concludes with a little spiel about how he still takes losses, how you can use micros to reduce your risk, stuff like that. Nothing new in this video, but it was interesting to see his trade on the non-farm payroll news at 8:30. But that's not something I'm gonna do. I'd rather wait for a setup afterwards around 9:30. But if you've enjoyed this video, please give it a like and comment below if you took this trade as well. But until next time, safe trading.